Lot ini bos kami dah beli. Dia tak kasih buat aktiviti kat sini tau.
Apa-apa pun tak nak.
Cik!
Techbond! Sekarang ni tembak pisau aku. Bukan tembak untuk kamu semua main-main. Faham? Aku dengar nama orang tak letak dokumen yang lengkap. Tak tahu datang dari mana. Kalau mau belajar, kamu pergi cari tempat lain. Diamlah. Jangan buat bising. Customer aku sudah komplain.
Saya faham Cikgu Siti. Tapi budak ni tak ada sijil lahir, tak ada dokumen.
Tak bagi budak-budak ni pergi sekolah kan? Tak apa. Biar aku je yang dekatkan sekolah dengan diorang.
Boleh tak saya tukar apple ni dengan buku tu?
Yang ni? Boleh je. Nah. Tak apa, awak simpan je apple tu, okey?
Betul ke?
Betul.
Terima kasih, Kak.
Okay, so A untuk?
Apple.
B untuk?
Ball.
C untuk?
Cat.
Walaupun dia tak ada dokumen, Cik, dia tetap ada masa depan.
Peraturan tetap peraturan.
Kalau dah tak ada jalan lain, Cik, memang masa depan budak-budak ni tertutup selamanya, Cik. Budak-budak ni tak minta kemewahan. Diorang cuma minta peluang. Kalau maksud sebenar raya adalah untuk buka pintu dan hati, inilah masanya tuan-tuan dan puan-puan. Untuk kita buka pintu untuk mereka ni semua.
Bos, stok kita terbakar sebab ada orang buang rokok. Kita kena cari tempat lain.
Mr. Lim, saya nak jemput awak ke rumah terbuka hari raya nanti.
Bukankah itu maksud sebenar raya?
Pergi! Pergi!
Dulu aku fikir sekolah untuk yang ada. Cikgu ajar ilmu untuk semua. Walau datang tanpa nama, di sini kami semua diterima.
Haji, bye-bye, bye-bye. Tempat ini tempat ini nama orang pakai je. Tapi jangan bising sangat.
Cikgu nak awak ingat satu pesan cikgu, okey? Ilmu yang kita ada, kita kena kongsikan dengan semua.
Tahun depan boleh tak saya ajar budak baru?
Boleh.
Terima kasih, cikgu.
my kids in Chocolate to become the future. They can be proud of themselves telling that I'm the street children that came out from Buku Chocolate. And I'm here to change humanity. I'm here to change how people live. Okay, done.
Hi, morning everyone. Welcome back to Morning Cup by 8. Happy Friday. All right, so taking a look at the S&P 500. Well, it closed higher on Thursday's session, gaining about 0.3% to close somewhere around 0.7041 points, marking another record high for S&P 500. So the index, the upside for the index yesterday was driven by the easing geopolitical concern as the optimism grew that the tension could stabilize, right? Also with talks and also ceasefire developments improving the overall risk sentiment as well. So from the recent news saying that Israel and also Lebanon agreed to the 10-day ceasefire, which is something positive to the market. Well, just to note again, it's Israel and also Lebanon, not Israel and also US. Sorry, Iran and also US. Right. So also, at the same time, market were also supported by strong corporate earnings expectation and also some positive economic data as well. And moving forward, the market is expected to maintain the slight uh, upside bias, but with heightened volatility, right? So focus will remain on earnings results and also the geopolitical development, which will continue to drive the sentiment for that, right? So to me, right now the market is still in strong positive move, but still somewhat fragile and also headline driven, right? So if you look at the China E50 futures, close higher yesterday, gaining about 0.9 points, testing this 15,500 resistance level. So the upside was mainly supported by the improving overall global risk sentiment, which also helped to lift the broader equity market as well in China. Also, there's this activity going now, where the capital market activity in Hong Kong seem increasing, right? With more companies pushing ahead with IPOs, right? Which also help to improve the overall sentiment and also the liquidity outlook. So looking ahead for this China A50, for those of you who trade China A50, will remain potentially remain in a positive move and could reach this 15,500 resistance level. So a clear breakout might possibly require a stronger catalyst, such as policy support and whatnot, and better economic data as well. So if this 5,500 resistance level is broken, the next resistance level we are looking at is somewhere around 16,000 level, right? So for the WTI crude oil futures, were closed slightly higher on Thursday session, with prices holding firm after the recent volatility. So this was due to the ongoing uncertainty around the Middle East supply, right? As tension remains unresolved, and I think the situation around the Strait of Hormuz is still very much unclear right now. So also oil prices, were supported by some doubts over how fast peace deal can be reached, even though the negotiation um, uh, is ongoing. So I think this uncertainty helped the price edge higher during the coming sessions ahead. Also, oil prices are expected to remain volatile with slight upside bias And in terms of short-term direction, well, it really depends on the the development, the geopolitical development, and any updates on the US and also the Iran talk, right? So as for our Malaysia market, well, the KLCI closed slightly higher, gaining around 0.37% to close at 1689 points, while the FKLI also moved up slightly higher, tracking the stronger cash market. So the overall sentiment improved slightly, right? I think the rebound was mainly driven by the global the improvement in the global risk sentiment as well, as market reacted positively to hopes of the easing tension, which also lift the regional equity higher, right? So also we are seeing a bargain hunting uh, activities in key index heavyweights, especially after the recent pullback, you know, which also supported the index higher throughout this week. Um, uh, and however, I think the overall upside was still moderate, right? It's not very powerful as investors remain cautious given that the risks are not fully resolved yet. And also external uncertainty still there lah, right? And moving forward, I think the market is expected to stay range bound to positive with slightly upward bias. Um, Also following up on the small cap index from yesterday, right? The index is now has breached higher, showing that the small cap names are in focus right now. So to make things simple, so if you look at these small cap names, right? Try to look at the ones that have below 2 billion market cap ringgit, right? However, if you're still unable to find names, we have highlighted we have highlighted a few names in yellow for you to look at in the small cap space, which to me is quite interesting right now. I think like yesterday, Dufu, Coraza has popped up significantly higher, well above our targeted resistance as well. Yeah, looking at the heat map for Malaysia market as well, I mean, yesterday's move was supported by gains in the selected banking names. You can see here, Public Bank, RHB as well. Alongside continued strength in the construction counters like Gamuda. I think we have published Gamuda report as well. The upside was further lifted by the buying interest in tech stocks. You see here we got Zetrix scenario also, while my weakness in the few industrial and also healthcare names, such as the Sunmet, kept the overall gains, right? So looking at our Malaysia trading stocks for today, we have FNM, right? So the stock is on its breakout formation, higher 30 and 30 ringgit and 50 cent level on a strong volume. So we expect the momentum to keep bullish and the stock able to propel higher to test the next resistance at 32 ringgit and 50 cent level. Second resistance is at 34 ringgit resistance level. So if the stock to clear below this 29 ringgit level support, this could reverse the course and trend lower. And also next we have Oriental Kopi. So the stock is experiencing a breakout at ringgit and 10 cent level, and if the stock remains bullish, we're expecting the price to reach ringgit and 20 cent in the coming session with high volume as well. Second resistance is at ringgit and 30 cent level. Do keep an eye at this one ringgit level for any attempt of reversal. So today we have two breakout stocks and also I think both of them also from the consumer names, which is Kopi, Oriental Kopi, and also FNN. So do keep an eye on these two stocks. Right. Lastly, for the FCPO, well, it closed higher yesterday, slightly higher, extending its rebound with prices holding firm above the recent support level. I believe that the overall tone is improving, but still within a cautious um a, cau- a cautious range, right? So yeah, the upside was mainly driven by the strength in the broader edible oil market, especially the soybean oil, right? Also at the same time, firmer crude oil prices also support the movement, helping it improve the overall sentiment. Also, we are also seeing some recovery by after the recent weakness, especially after the price fell earlier in this week, right, due to the softer sentiment. Yeah, I think overall market remains in a range trading mode, right, with gradual recovery, but still no strong breakout yet for now. But we still keep our positive bias remains unchanged, targeting for the immediate resistance at 4,800, followed by 4,925 level. And I mean, we keep our stop loss at 4,400 level. Right, so that's all from me. I pass the floor to the next speaker. Thanks everyone and happy trading. See you.
Okay, thanks, Aiman. We have a company update on Techbond. Just for those who are not really aware of the stock, it's really a company that's involved in industrial sealants, and they've got multi-region sort of exposure to the woodworking segment, packaging, and all. Really, this basis of this report is just basically to look at the fundamentals vis-a-vis the Middle East crisis. We've taken a view that earnings will probably be affected into 27 and 28. We've cut our core earnings for both years by between 8 to 15 odd %. Now, if you look at the business as a whole, there is a feedstock by the name of vinyl acetate monomer. This is a plastic resin feedstock that comes from the petrochemical production. As you know, a lot of this actually comes from the Strait of Hormuz, and with the closure and all that, a lot of the suppliers are having difficulties getting the feedstock out. So Techbond really depends on this. 80% of the cost of goods sold is really coming from this particular petrochemical variant. Management believes that the cost will rise by about 5 to 10% versus pre-conflict levels, but it has sufficient stocks to last about 6 to 9 months. Essentially meaning that gross profit margins should remain at this current level in the near term, or even see a slight increase. Now, we've done a sensitivity analysis. A 5% increase in raw material costs would basically shrink GPM by about 1% in FY26. The year end is really in June. So if you're looking at that impact, it's 4 months impact into June, and about 3% impact in terms of FY27 and 28 numbers. Now, we do expect margins to normalize towards the fourth quarter. Stockpile is progressively depleted, and of course, they will have to pay higher spot prices then. Now, there is also a spike in terms of revenue, in terms of the upcoming quarter. Again, this is really a customer stocking up on orders, ahead, and also, we've been getting comments that logistics costs have also risen, and they've decided to pass this through to customers. So that should also preserve margins a fair bit. Now, liquid natural gas, which is actually a core input as well in the production process for sealants. The supply has not been disrupted, although they've seen some cost escalation in recent months. Still manageable, strict sense of the word here. They've got an in-house polymer production in Vietnam. This is basically a competitive edge. As you know, Gulf petrochemical output curtailments are basically creating supply challenges for a lot of its competitors, which has global sort of operations. Now, if you look at Techbond's end user segment, packaging segment basically accounts for about 25% of group revenues. This has actually been on the increase in recent years. I think there's been a bit of a pivot away from woodworking, which is really subject to, the global tariffs. It was actually a bit of a concern before when US decided to impose its unilateral tariffs, and that basically affected a bit of the furniture industry. As you know, I think Malaysia is actually a big exporter of furniture and woodworking materials to the US. And so they've decided to actually diversify away from the woodworking segment, and that's actually been seeing a bit of increase in terms of contribution. Now, the other segments, in terms of the end user side of things, about 20% comprises automotive. They're also involved in the tobacco industry, also a bit of retail as well as building and construction, mattress, manufacturing mattresses and all that. So these are the end user segments that basically rely on Techbond's industrial sealant. Now, they've got a subsidiary by the name of Malaysian Adhesives and Chemicals. For those of you that may not be aware, I think they acquired this company back in 2022. There are synergies there in terms of the type of products, type of sealants that Techbond does. And with the MAC acquisition, they're basically widening the product portfolio. Now, MAC's focus has always been the lower end side of things. So I think there's been a bit of margin pressure. And over the last couple of years, Techbond has been rationalizing the product portfolios at MAC. So it is actually a profitable entity, but because of the low margin business, they're trying to exit some of the lower yielding products. So I think that strategy will continue. You will probably see margins for the group improving over time with the exit of some of these low yielding products. Microspheres, which is actually a higher margin product, it's something that management has talked about for quite a fair bit. Something that's really not seen big commercialization in terms of product portfolio, but if this thing comes about, I think there will be a lot of upside in margins over longer term. So I think overall, if you look at the forecast, we've taken down 27 and 28 core earnings by between 9 to 13%. Basically to build in a 2% raw material cost increase for those 2 years. We've been very conservative here versus that of management's guidance. Obviously, they have basically guided a 5 to 10% increase in the key raw material cost versus pre-conflict level. So we do expect on a base case basis, house views that that Middle East crisis will eventually taper off as we move into the later part of this year. So we're maintaining our buy call. There's no change in terms of the rating, but we've also lowered our target price to 37 cents from 42 cents. What we've done here is that we've actually moved our PR attributable to the valuation to about 13 times versus 14.5 times previously, based on calendar year 27 numbers versus calendar year 26 numbers, just to indicate that the year end is June. So with that, target price is down to about 37 cents. Where the stock is trading at currently is about 10 times forward P, which is basically near one standard deviation from a historical 5-year min. Just want to point out that if you look at the international global peer average, it's trading at about 15 times. So I think it's a fair discount. Our PE target in terms of valuations at 13 times. So that gives you about 37 cents in terms of the calendar year 27 EPS. Okay, that's from us for today for Techbond. We'll see you again next week. Morning, Kappa. Thank you.